Let's also talk about what's going on with oil prices, shall we? Because we've got a tough day in the oil market with crude prices sliding on renewed concerns about energy demand from China. Now, both Brent and WTI have actually erased their gains for the year. WTI settling at its lowest level since December 12th. Joining us now is Dan Dicker, the Energy Word founder. Dan, always a pleasure to see you. So just give us sort of broad strokes. What is behind this latest leg downward in oil prices?
It's been exactly what you said. I mean, there's been, for the most part, Julie, there's been a lack of demand and supply that keeps on coming onto the market, despite the fact that rig counts keep going down domestically. I mean, the production in the United States continues to rise, and OPEC Plus has gotten tired of cutting production for the marketplace. And now there have been promising increases in production that are supposed to start next month. And there's no indication that they're going to back away from those. So more oil coming in. Again, the end of the Labor Day weekend, and it didn't seem like demand was very big. Gas prices are lowest that they've been in 3 years. Just in general, there's been a commodity kind of glut out there, and oil has been leading the way down.
Let me ask you, Dan, we talk on the demand side, we talk about weakness in China, and obviously for good reason. I'm just curious, what is the demand picture like here in the U.S.?
Again, the same thing. We're not seeing anywhere near the kind of demand growth here in the United States that would offset the kind of supply increases that we've been seeing, both domestically in the United States and globally with OPEC Plus. Again, this is not unusual for any of the commodities. I mean, you can see copper, lithium, iron. I mean, everything is in the commodity space is going down while the stock market has been going up. And it's really one of those moments. It's very rare. The last time we saw commodities beaten up this badly was right before the pandemic in 2019, and before that in 2015. So not very often that we see this kind of disconnect between commodity prices and stock prices. In general, from a trader's point of view, they're usually wrong when they get this pessimistic about commodities, but I guess that's another story. For today, bad news for commodities all across the board.
Well, I guess, will this go beyond today is the big question now, right? We even talked about China, but China demand remains maybe not what the market was hoping for. These other dynamics you're talking about on the supply and demand side, is there going to be any change in those dynamics in the coming weeks?
Look, it takes a while for these gluts to clear themselves, Julie, and they're there. They're real gluts. But I do see, like I say, I see two kind of very important symbols of when this market might turn around. Number one, obviously, is the Fed and their ability to lower rates, and how far they will go over the next couple of months to lower rates does inspire the kind of investment that these kind of commodities need to generate a little more demand. That's number one. Number two is the traders themselves. I'm a big believer that when all the traders get on one side of a trade, it's normally wrong. And they are as short as they've ever been in the commodity basket, like I say, since before 2019. And usually when they get this deeply on one side of a trade, the market has a tendency to bounce the other way, and pretty hard. So I've been talking to some of my subscribers and telling them it may be time to wait in, get a little bit of the copper miners, get a little bit of the oil companies that are cheapest, get a little bit of lithium and cobalt, some rare earths that have really gotten beaten up. And, you might have to sit on it for a little bit, but they're pretty cheap right now, and they represent some decent value.
Dan, back to oil on the supply side, there were some headlines today, Dan, that talked about maybe an end to this dispute that halted Libyan production. How big a deal is that?
Not very much. I mean, again, we're talking Libyan production is under 1 million barrels a day. And in the global, effect of 106, 107 million barrels a day, the things that we're really looking at is what Saudi Arabia is going to do with their spare capacity, what the United States is doing with their spare capacity, and what the Russians are doing with their spare capacity. So on the margins, it might matter if we were at a place where the balance was really kind of paper thin. It's not. There's a lot more supply out there than there is demand, and you've kind of seen it in this slow kind of bleed away of prices of oil over the course of 2024, basically the entire year.
And it sounds like from what you're saying that the glut is going to be maybe slow to reverse as well, or kind of it happens gradually. But are there any sort of upcoming catalysts, either to the up or downside, that investors should be watching for?
It's not what you see beforehand. It's sort of like the positioning you do as a trader, kind of, Julie. I don't know what the turnaround is going to be. But like I say, these signals that I see that could spur a change in the demand picture, definitely the Fed lowering interest rates has a big impact on that kind of investment into new production that moves prices higher. So it's not something that happens overnight. It's a slow train. It's turning around, an aircraft carrier in a canal. But when it turns around and it starts to move, you're best to be in it beforehand because you don't generally catch it on the way up.
Dan, let's end here with what you see with gas prices in the near to kind of intermediate term here. Prices at the pump, Dan, when you're talking to your subscribers, they asked you, bring out the crystal ball. What do you tell them?
No, I think we're pretty much there. I mean, another 20, 30 cents in gasoline. Maybe we'll slip slightly under $3 a gallon. That would be really nice. I mean, for a lot of people who are driving. I don't know. There's a limit now to how low oil can go. I think those days of seeing $2 gasoline are completely over. Of course, you never say never in this world, but I think those days are kind of over. Again, once these markets get to a point where folks have to shut down supply because they just don't make a profit by pumping it, that's when you see those turnarounds. And you're getting really close. I don't see prices of oil going, into the 50s for sure. And mid 60s, I would really start to be looking at oil companies to buy just for the fact that it just gets too cheap to believe.
Dan, great to have you on the show. Thanks for helping us kick it off. Appreciate it.